Hello and welcome to KYC, Know Your Counterparty, hosted by PM Insights, Private Market Insights. I'm your host, Nick Fusco, and today I am joined by Billy Branrith of Headwall. So welcome to the show.
Hey, thanks for having me.
Yeah, you got it. So our show is all about getting to know our counterparties, who's involved in the pre-IPO, growth stage, secondaries, network, infrastructure, lifeblood of the market. And we wanted to bring you on. You and I have known each other for a few years. We've met up a couple times in person, which is great. But would love, if you can, Billy, give us a minute on yourself and who you represent. Would love to hear about it.
Absolutely, yeah, thanks. So I am a co-founder of Headwall Private Markets. Started the firm 4 years ago, been in private markets for 8 years.
Nice.
And prior to that, I spent 23 years in the listed market, mainly as a derivatives trader and portfolio manager.
Amazing. So when did you decide it was time to make the switch? So if it was 8 years ago, that was early. You must have had a crystal ball, or maybe it was too early, right? But what was the impetus on that?
Well, I was at the time doing a portfolio, what we call an event-driven portfolio and options. Performance was great. There wasn't a lot of things going on at the time, and I was kind of looking for something to be more flexible in my schedule, quite frankly. And living in San Francisco for 26 years at that time, been around a lot of entrepreneurs and venture capital, which is much different from the trading world. And from those relationships, I kind of got introduced to the private market brokering, and quickly learned that that's kind of a skill set that would transfer to me with my background in trading and market making, and having some sell side experience in the listed market as well. And then came in and thought that we'll try that.
No, that's great. So is more of a natural evolution than anything else, and kind of the right place. And I'm curious if it was the right time. I mean, sometimes it's better to be early than late to the party, but that must have been like the Wild West back then. I mean, what were some of the names that were being transacted 6, 7, 8 years ago?
Well, you're right. Well, the Wild West is a great term for it, and that was one of the things that attracted me to the market in a way. It was just more that it wasn't very structured like the private markets, like the public markets were. And I just felt like bringing best practices from the listed market would translate very well into the growing private market. At those times in that 2016, SPOO volatility was probably 9, and there's a lot of things going on in the long short equity world where people are looking for new places to invest. And when I saw the private market, and in a way it was like the one market had the benefit of hindsight in a way, which we would never think of, right? You look at a company that's Series D, you wanted to invest but you passed. Then 6 months, 8 months later, maybe the company hit some marks that you were hoping they would get to. Now they have. And you're like, man, I wish I did invest. Actually, you can. Right? You can come into the secondary market, buy those shares, maybe at a discount with the risk-adjusted returns there, and say, hey, now I want to get in. And now you have that ability to get in the market. So I thought that was very interesting, and I thought a lot of traditional Wall Street more investment firms, whereas the world I had come from, would want to get involved in the space. So I thought it would become very attractive for them, and eventually it did. We saw more and more people get in. Right,
and I think you're kind of hitting on another aspect of what attracts many from the old world into the new world, if we want to call it that, or into the Wild West, is the lower correlation of coefficient to, let's say, the NASDAQ or the S&P 500. I think that's a great thing, and I mean, just knowing that there is an ability to take exposure to these assets well in advance of the IPO, because I think a lot of people feel left out when the IPO hits and they're not able to be involved. You're part of the solution to that, which I think is great, right?
Yeah, and the market's just shifted overall, right? A lot of these private companies would have gone public in their series. What is their Series C round historically today? But now they're going to their F and G rounds, and farther and farther out. So as we know, private companies are now staying private on average close to 12 years.
Right. Whereas a decade ago it was 4.5 or 5.5 years.
So all that growth is happening when they're still private. So you're right. That's why so many of those institutional investors want to come in and get into these names now when they're private, because that's where a lot of the exponential growth is occurring.
Right. And we're also seeing the exponential growth of volume, which is amazing. So the fact that you were in this early, you have a good understanding of how this market has evolved from the beginning. That's what attracted us to the market. And this isn't a plug on PM Insights, but we saw this occur within the loans market, and that was 25 years ago. We saw this occur in the credit default swap market 20 years ago. And then this is the natural evolution for OTC asset classes, and it's not necessarily a silver bullet. Someone needs to come out with an exchange and it's all done. That's not how it happens. So the fact that you came in on the back of a lot of these strong relationships makes a lot of sense. And this is why we're seeing, the increase in the number of brokering activity in the space, not the decrease. And hopefully we're part of the solution when we service you guys and our clients, that the added transparency builds comfort. And we're certainly seeing the infrastructure grow in the market too. So that's great.
And it needs to. It's a big asset class, and to your point, it's going to grow. It's going to mature. It's difference between growing and maturing, right? They're kind of two different things. And coming from, again, that listed world of understanding how things are very mature there and how we can apply certain parts of the aspects of that world into the private world, because it's not a direct linear thing. Right? There's certain things in the private markets are always going to be different from the public markets. And I think that's one thing that people have to kind of accept in a way. That
Absolutely.
Doesn't mean they're going to share similarities, but they're not going to be identical. And there's a reason for that. If you want to do that, then the private market would be public, and it's not.
Right. So you're saying when I go on E-Trade and I execute something and a second later it's kind of done and dusted, that's not what happens here?
No. I don't think that's going to happen.
Yeah, so maybe just for the audience, walk them through, what a typical trade might take. And that is the worst question to ask, because I know every trade is different. But if it's not, I put an order in and it executes, what is the quick couple steps of, I have an interest, there's a connection, and where it kind of goes from there to actually take some ownership of a stock?
Well, there's two ways to look at it, whether you're the buyer or the seller, right? So you would think these things should be the same, and they are, but they can be different in the sense that there's more sensitivity when you're a seller, right, in the private market. So just because the nature of the relationships are different with these investors than they are when they're public, and they don't really want that broadcast out there. So, what we do is we do handle everything from A to Z in a transaction, right? It's much more hands-on on the operational side, which we have a very good expertise at. We're very proud of it, and we actually think it's something that really helps our business, quite frankly, how good we are on the operations side of it. So one is all about managing expectations, having investors come to us and say, if that's where we're going to start, this is what I'm looking for. A lot of times if they do come to us unsolicited, they have an idea of at least of a name they want. Sometimes they have a price.
Right.
I'm a big believer in showing price, especially on the buy side. I mean, we are helping make markets. We're helping find liquidity. We're trying to find a price discovery. So starting with a price is very helpful. Right? And because it can differentiate you from others who are just kind of like, is there stock out there? I want to buy it. Well, the first question someone's going to ask is, what price do you want to buy it?
Yeah, where are we looking, and what are the terms that you need?
Right.
I mean, is it common? Is it preferred? What's the difference in this particular market? Because in 2021, maybe it didn't matter, or you thought it didn't matter, but it actually mattered more than any other time, right?
To your point, there's lots. Every deal is different. Right, the probability of IPO is different today than it was 2 years ago, so that changes the comp. What this kind of stock you're looking at. Common stock is going to be looked at a little differently than it was if you're more in an M&A world than you are an IPO world. So when was the last round? Will it raise again? And that's something that our team we every deal that comes in, we put a lot of thought behind it, and we do it collectively. Right, everybody can voice their opinion on why we think what's going on here, who do we think it's going to be a fit for. It's not just like, oh, here it is, let's move it out the door in 2 seconds. It's almost the opposite of what we do.
Right.
And then the sell side, again, our goal is to make sure that those clients know that when they come to us, it is going to be taken care of the proper way, and we are going to be very selective of who sees it, because it's very important for that deal. And I think that's, again, the different firms out there, what they might do is that's the reputation that we're hoping to build, that they know they can come to us. Everything we do is in-house. We don't outsource our deals, right? So that allows us to have complete control over who's seeing what deal, which right. I think is extremely important in the private market.
We completely agree. And a lot of our business model, and again, we are not a broker, never have any intention to be one, and I'm very happy to go recording that out there because we've said it for the last 4 years. But I think that discretion is a key feature, because Absolutely. we don't want John Doe's name blasted out there for the whole world to see. That is not to really anyone's benefit to that end. No. But I think thematically, maybe if you could touch on, you brought up the point of, okay, who's this a good fit for? So what is the typical client makeup that you look up? Is it RIAs, family offices, VCs? Is it different types of high net worth? Would love to understand who your client base is typically.
All of them.
Great.
Right? And that's our goal, is to continuing. It's a big world out there, right? And having all these different types of investors is important because the market dynamics will change, right? Right. 2 years ago, having a large client base of crossover Wall Street firms active. Maybe not as much today, right? So you want to be able to, and then like I said, you mentioned every deal is different. That is something we say all the time, right? Every deal is different. It comes in today. Wealth management, let's say, has really stepped up, right? Their game. They're very involved, and it makes a lot of sense. But they might look and want to invest differently than a hedge fund or what we call a large asset manager or private equity firm would want to invest, right? Right. So again, the type of size that we have, the access to information, whether we have it or not, differs, and it for some it's a fit, some it's not. So and those are the kind of things that we're always looking at. So we can broker any deal, any size deal. We're mainly institutional nature. We don't really have a retail base per se, but we do work with our supervising broker dealer Alliance Global Partners, and within their own wealth management channel. So we have and not just them. We have a lot of experience with a lot of different types of those channels that we understand how they operate. So it's very easy for us to help them, because a lot of people come to us and don't know how to maneuver in this space.
Absolutely.
So we'll take a lot of time to explain to them, whether they work with us or not, how to do it. Because
right.
And the more players, the better.
And it changes so dramatically. And as you're speaking, it's giving me the kind of wartime flashbacks of being in the asset-backed security market in 2006, 7, and 8. Actually, for longer than that. But when we're looking at a deal here in the private markets, there are a lot of comparisons that you can make, because there are round lot sizes, which we would call institutional, and there are odd lot sizes, which maybe in this case are some retail. And then in the asset-backed market, we used to have the idea of the tranche-based setup, and we could have your AAAs straight down to your triple Bs. We don't have the same setup here, but we do have like a AAA set that would be sold to an asset manager for short dated, and a AAA that was super long dated to go to an insurance company. It's almost like with the understanding of direct on the cap table versus SPVs, what's the liquidity profile of the customer that which you're hitting on? With the differential between common and preferred, what is the expectation, or kind of where's this company going to shake out? Is it going to be an IPO exit or an M&A? So whether you're a fixed income person by trade, or you've been in the public stock market by trade, there are a lot of comparisons to make, and I think that's why this is not going to be a one exchange to rule them all type setup. You need someone with sophistication and understanding of the market to navigate. So yeah, love that. I mean, hopefully the comparisons help for the audience, but I think it's quite unique what we're doing here.
Yeah, no, you're right. And if people are going to broker something that they don't realize there is a 3x liquidation preference on the last preferred, exactly, and you have common stock, that's an unfortunate situation perhaps for the common shareholder, right? And it could be a really bad situation for a buyer who buys it without knowing it. right? So there's just so many other things that go into the transaction that we always want to be speaking to clients about to make sure everybody. So we're very like we say, we are very transparent one-on-one, but we're very discreet to the outside world, right? And
Love it.
that could be a pro and a con, right? We don't really market ourselves, but at the same time, when we do work with our clients and we get the referrals back, we know that we're doing the right thing.
Right. And I just put on my asset-backed security hat. I'm going to have you throw on your options hat. A lot of this market, the more I think about kind of how our conversation is progressing, is also about timing, right? So if you're trading options, you're thinking, okay, what's going to happen on that third Friday of the month at option expiry? Where am I going to end up? Because I'm not caring necessarily about 5 years from now or 2 months from now specifically, right? It's gonna be around the option expiry. How are you looking at certain names that you anticipate there's going to be an IPO soon versus maybe an M&A versus who knows what's going to happen? Super long dated. We're happy with super long duration. Do you find that you as a firm are trending towards a certain type, or do you find that your clients are demanding a certain end of the market?
It's kind of twofold in there. Yes, I would say the first part is we do have clientele that are more actively searching for the companies that they believe have the most probability of having an IPO in the next 12 to 18 months. Right? We've had a closed banking window now for a couple years. There's a lot of uncertainty out there, of course, with elections and geopolitical concerns and things like that. But I think with 2 years behind us, and I've been around again in markets for 30 years. I've seen lots of cycles. Like I said, a lot of our team has seen lots of cycles. And so I think starting to see that is a good sign. We're getting to this road to hopefully liquidity soon because there's a lot of pent up supply out there that wants to be released into the market. So I think where so you have a subset of those firms looking for those deals, and then the other is what we're seeing is because of the new popularity of AI and the broader AI space, that there's a lot of demand in that space again from wealth management retail channel in those names.
Right.
And there's a very broad subset of that market. And there, of course, there's the 2-3 big names that are out there, but there's a lot of great names at the same level. They're just not as popular in the news, right?
And that's thematically. I mean, you and the next five guys are nailing it on the AI, right? Everyone wants to have a slug of that. And the nice part about doing it in the private markets is you're getting more pure plays in the private market than you can possibly get in the public market. Name a public company that is predominantly focused on AI right now. It's going to be pretty hard, but you could rattle off a few names immediately for privates. So I like that. And then you're looking for more of the ones. Okay, what is the most attractive? Maybe less so to be acquired, but more so to IPO. Is that right?
Yeah, I mean, for us, we are just all servicing what our clients want. Right, and then of course, if we're having this conversation with someone, if you are the buy side client, like what's out there, what's good to look at, well, then we could say, well, clearly, everybody knows that AI is the big thing right now. But at the same time, like anything else, if everyone's kind of focusing on one thing, then there's this whole other area that's not being serviced. But there's a lot of great deals there, right? And again, with this lack of liquidity in the market, a lot of the venture capital firms, right? The other big thing that people talk about is the DPI, right? They need to get those dollars back into the fund, right? They want to return liquidity. So that's the other thing that I've seen. I think that's been a big change over the last few years is venture capital firms really starting to understand being more diverse in their holdings, right? It's a weird way where hedge funds have a lot more quickness in and out of diversifying their portfolios. But I think at the same time, venture capital is understanding like, hey, when these things stay private longer and longer than we anticipated, we probably do need to make some sort of decision here if we want to capture some sort of liquidity, partial or whole, in some of our names. And then, because that was probably a thought they wouldn't really ever have 3 years ago, right?
Yeah.
And now that they do, but it makes sense. It's healthy, and I don't think it's a negative thing at all.
And then for any listener that's coming on, when we're touching on DPI, distributed paid-in capital, anyone that was doing that in 2022, as things are cresting and coming off, they were the smart money. And then really the ones that were able to return some capital to their investors in their funds before you took a lot of those down rounds, before there were some issues with kind of where are we going to remark, where are we going to reprice. So that's really where we focus on providing a market-driven price where the different approaches are market-driven. We also have marking to last round and marking to cost. Really you want to think about different ways to approach your valuation practice, or you can outsource it and do various mechanisms. But that DPI point is a big one, and it's a necessary mechanism, I think, to have liquidity out there for both the buyers and the sellers. No, so that's great. So market direction. Always want to just ask point blank: is the market going up? Market going down? Where are we headed?
Well, I've my whole career I don't take an opinion on market direction. It's
Great.
as a volatility trader, we kind of you look at the world, you assess what's out there. I don't pick direction. Like I said earlier, in the next 2 months or something, like could there be some added volatility in the market? And anytime you go into an election, there's this uncertainty, right? There's a new regime's going to enter the White House for the most part, right? Whether it's because a sitting president's not going to be the next president, so
Correct.
there's going to be a change. So there's always uncertainty there. So there's just a lot of investors and markets that don't like uncertainty. So we could see things maybe even slow down in terms of volume leading into the next week or so, right? And then after that, we still have a lot of geopolitical things out there that could take effect, which will also be a result of what happens in the U.S. and who wins the election. So I think there could be some added volatility, but then I would expect to probably then see the VIX and volatility start to come down over the next couple months is my guess. And then of course, as we all know in general terms, when volatility goes down, then people are more confident, and then hopefully that will then pick up capital markets across the board, right?
Yeah. Well, I love it. I love the opinions. We kind of tackled a lot in various different directions, so truly appreciate the time. So we want to cap it off there, but ultimately, hopefully folks feel they can know a new counterparty here, or know more deeply an existing one, which is great. But how do we get a hold of you? I think that's a snowboard jacket, ski jacket in the background. Is it on the ski slopes? Is it the telephone? Go to your website, email, Twitter handles, LinkedIn handles. What is the best way to get a hold of you?
Well, first, I'm old school, so if you reach out to me, I respond.
Great.
Right? So for our website, if you do click on there, it will get to me. And then there's also a phone number. I pick up the phone. People can call me anytime they want. They don't have to just call. That's another thing that's old school. Just call me. And I do the ski event, financial industry event this year. Every year I do it. So if people are out there that want to join us, you're more than welcome.
Give it a plug.
This year.
Give it a plug, because last year I think you were in Andorra. I ended up out there like a month after you. Blew my ACL, which was great. So I should have joined your trip instead of going on a different one. But yeah, what is the trip?
Yeah, so this is the Interbourse ski event. It's been going on for 55 years.
Wow.
Financial professionals from all over Europe and North America, actually Australia, and we've had some people from Japan come at times. We'll be in Courmayeur, Italy, and third week of January. So it's about 280 people probably at the event, and it's just a great community. So
fantastic. Well, if you're in Chamonix, you can pop under the tunnel and hop in Courmayeur very quickly. Get some amazing Italian food. That's the best way to get a hold of Billy, I think. Yeah. If he gave us all those options of phone, email, website, all of it, but amazing. Really appreciate the time. So
thank you.
Thank you for joining the show.